more strongly than expected. Inflation could turn out higher than anticipated if wages or profits increase by more than expected. Upside risks to inflation also stem from the heightened geopolitical tensions, which could push energy prices and freight costs higher in the near term and disrupt global trade. Moreover, extreme weather events and the unfolding climate crisis more broadly could drive up food prices. By contrast, inflation may surprise on the downside if monetary policy dampens demand more than expected, or if the economic environment in the rest of the world worsens unexpectedly. Looking at financial and monetary conditions now. The policy rate cut in June has been transmitted smoothly to money market interest rates, while broader financial conditions have been somewhat volatile. Financing costs remain restrictive as our previous policy rate increases continue to work their way through the transmission chain. The average interest rate on new loans to firms edged down to 5.1% in May, while mortgage rates remained unchanged at 3.8%. Credit standards for loans remain tight. According to our latest bank lending survey, standards for lending to firms tightened slightly in the second quarter, while standards for mortgages eased moderately. Firms' demand for loans fell slightly, while households' demand for mortgages rose for the first time since early 2022. So overall, credit dynamics remain weak. Bank lending to firms and households grew at an annual rate of 0.3% in May, only marginally up from the previous month. The annual growth in broad money as measured by M3 rose to 1.6% in May from 1.3% in April. So in conclusion, the Governing Council today decided to keep the three key ECB interest rates unchanged. We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. We will keep policy rates sufficiently restrictive for as long as necessary to achieve this aim. We will continue to follow a data-dependent and meeting-by-meeting approach to determining the appropriate level and duration of restriction. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. In any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation returns to our medium-term target and to preserve the smooth functioning of monetary policy transmission. We are now ready to take your questions. Thank you very much.
Thank you, Madame Lagarde. And the first question goes to Alex Weber of Bloomberg News. Alex, please.
Thank you. Good afternoon. You said that domestic price pressures are still high. Could you elaborate a bit what the biggest lingering concerns were during your meeting around the issue of wages, profits and productivity, and what you would need to see in the data on those points that you're going to get over the summer in order to be comfortable with another rate cut in September? A second question on fiscal policy. Are you worried that large deficits and slow consolidation in some countries in the Eurozone could make it harder to bring inflation back to 2% and possibly even create financial stability problems?
Well, thank you very much for your two questions. Let me start with the second one, and I'm going to repeat for you a paragraph that we discussed and that we slightly modified, but which essentially remains intact with a bit more force probably, which is that national fiscal and structural policies should aim at making the economy more productive and competitive, which would help to raise potential growth and reduce price pressure. an effective, speedy and full implementation of the next generation EU programme, progress towards capital markets union and the completion of banking union, as well as the strengthening of the single markets are key factors that would help foster innovation and increase investment in the green and digital transitions. That will probably echo some of the things that you heard probably this morning when President von der Leyen presented her proposals. What is really important about the fiscal aspect is the following sentence. We welcome the European Commission's recent guidance calling for EU member states to strengthen fiscal sustainability and the Eurogroup statement on the fiscal stance for the euro area in 2025. Implementing the EU's revised economic governance framework fully and without delay will help governments bring down budget deficit and debt ratios on a sustained basis. This was discussed, and we believe that it's a very strong endorsement of the principle of discipline, so that all member states who have adhered and agreed to a set of rules under the fiscal governance framework will actually apply those rules and principles. There is a process that is underway that will take them to submit the multi-annual proposals that will be then reviewed, but this is certainly the set of rules that have to be implemented and respected. On your first question, and you give me an opening because you said what was actively discussed in the Governing Council over the course of the last 2 days and specifically this morning. You know, I see very much the discussions we had this morning as a story of on the one hand, on the other hand. And you're only asking me a question on the other hand, which has to do with the services inflation, which is obviously well exemplified by the domestic prices that you referred to. And the domestic prices is clearly high, has slightly increased compared even with the May reading, but we believe is largely determined by what I call the WPP, which for me is the wage, the profit, and the productivity. And we spent a lot of time actually looking under the hood of wages, profit, and productivity on the basis of rather limited information, because we don't have a lot of specificity at this juncture, and we will have a lot more of that in the coming weeks and months. But suffice to say that the wages, whether you are measuring it with reference to compensation per employee, compensation per employee on an hourly basis, the wage trackers that we use, and various other instruments, including Indeed, for instance, point us in the direction of rather elevated wages, which were embedded and totally taken into account in our June projections. So this does not come as a surprise to us. There is a very large component of catching up with inflation. So nominal wages increase significantly this year in order to compensate the loss of purchasing power that has been experienced by workers over the last couple of years. What is very interesting, because we debated that including with representatives of the national central banks, is that while it will remain elevated this year, many surveys, and the corporate telephone survey in particular, the SAFE survey that is published, indicate that this trend of elevated wages declined significantly in the course of 25 and even more so 26. So directionally, that's the direction that it is heading for. On productivity, there is a limited element of recovery at very low levels. Productivity was at -1. It's now -0.6, so there is a little bit of progress, but certainly not what we would like to see. Our expectations is that with consumption picking up, with more demand, the recovery will strengthen, and that will raise productivity as hoarded employees will be asked to respond to the demand that is addressed to the goods production and service supplying sectors. So on that front, slight improvement in the month of June, and we hope to see more of that as demand picks up. On the third component, profits, it has reversed compared to what we observed in the last quarter of 23, meaning that unit profits are now down to negative territory when they were actually in positive territory in the last quarter of 23. So there has been absorption of the additional labor costs that resulted from the catch-up and from the drift in labor costs. So that's our analysis of domestic prices, but clearly it is high, and it's a component of prices that we try to observe very carefully. And that leads me to one word that you used. You used the word point. And for those of you who cared to listen or to read the speech that I gave in Sintra, I specifically referred to data dependency, which is something that was unanimously endorsed by the Governing Council today. But I also made very clear that data dependency did not mean data point dependency. So we applied that to wages, to other elements that we measured very carefully in the last weeks and that we looked at together in the last 2 days. Sorry, it was a bit long, but you addressed it from the other hand, so I had to cover a bit of ground.
Thank you, Madame Lagarde. And the next question goes to Annette Weisbach of CNBC. Annette, please.
Thank you. President Lagarde, I have a question on the September potential rate move. Provided everything stays like it is right now, so that the indicators coming in line with what you're expecting, are we going to see a rate cut in September? Second question would be on what we are currently hearing from the United States, a possibility of higher tariffs and more trade tension. Is that something you are discussing in the Governing Council as also in terms of reinflationary effects? Thank you.
Thank you so much for your two questions. The decision that was taken this morning was a unanimous decision. But what was equally unanimously determined was the fact that we were determined to be data dependent, to decide meeting by meeting, and not to have any predetermined rate path. So the question of September and what we do in September is wide open and will be determined on the basis of all the data that we will be receiving. Obviously, our projection from June will be a point of reference, but the projection of September plus all the other elements that we will be receiving will be taken into account to decide what we do in September. But there is no predetermined path, and that was very strongly endorsed by the Governing Council. The issue of tariffs that you mentioned, that's an important aspect, and we will have internal discussions within the Governing Council about the risk resulting from segmentation, fragmentation, and obviously the tariff increases that are flagged, either as to be maintained or to be increased, come into the picture. And that is particularly important given that export is one of the engines of the recovery as we flagged it. It's consumption, first and foremost, driven by the increased purchasing power resulting from nominal salary increases and reduced inflation. But it's also an increase in trade, as a result of which export out of Europe to the rest of the world would matter. And this is an area where we will be attentive, of course, to whatever political decisions are made by whoever in the future.
Thank you, Madame Lagarde. And the next question goes to Francesco Canepa of Reuters. Francesco, please.
Thank you very much, Wolfgang. So My first question is, you said that the decision was unanimous. Did you discuss, or did anyone even want to discuss the prospect and the merits of a rate cut today? And the second question is whether you feel more or less confident about inflation hitting a target in the second half of 2025 than you were 6 weeks ago.
So on your first question, you all know how those governing council work. We do a lot of debate and discussion, and we present views in the course of Wednesday, and on Thursday morning a proposal is put forward by our chief economist, Philip Lane, and then each and every governing council member says whether he supports or doesn't support the proposal by our chief economist, Philip Lane. And on this occasion, everyone was supportive of the decision proposed by Philip Lane. And as I said, it encompasses the 3 rate cuts unchanged, and the meeting-by-meeting data dependency and no predetermined rate path going forward. Excuse me. Now, you pointed to the issue of confidence. And we were not the only central bank in the world to have referred to the need to be sufficiently confident about the inflation path and the disinflationary process. I think we are at a stage where, with additional data, not data point, additional data that will take multiple avenues and forms, and that we will dissect in great details in the weeks and months to come. So with additional data, if that data actually confirms the disinflationary process that is at work at the moment, it will reinforce our confidence. And we shall see. But it will encompass a whole range of data and indication. And on each and every review of those components, we will still continue to apply our threefold approach, which will focus on inflation outlook. Therefore, it gives us a way in which we can look forward. We will also look at underlying inflation in all its decomposition, and we will look at the transmission. Those 3 components we will continue to review in the same way.
Thank you, Madame Lagarde. And the next question goes to Jean-Philippe Lacour of AFP. Jean-Philippe, please.
Thank you, Wolfgang. Mrs. Lagarde, bonjour.
Bonjour. C'est agréable de vous voir en vrai.
Ah, merci.
Sorry for the English
aussi
speakers.
vous, mais pas encore. Mrs. von der Leyen was today elected for a new mandate of 5 years. And so clarity in Brussels, but still politically a big fog in Paris, where we are far to see a kind of well-exercise of synchronized swimming, if I can make a metaphor that you may appreciate or not. So in the light of this, can you maybe share with us a comment on this new election of Mrs. von der Leyen for the next years? And the second question is, do you think monetary policy in its whole process, not just this meeting, these 2 days, but what comes prior to this, can be hampered by the fact, allegedly, that about 40% of the staff here in this House declare to suffer from burnout, according to a recent survey you may, of course, have news about? Thank you.
So in my old synchronized swimming days, the coach used to say, you have the choice. You swim or you sink. Difference will be in the hard work that you put in. There are a few things from synchronized swimming that I still have loud and clear in my head. I'm not going to comment on the policy avenues that have been flagged by President von der Leyen, because the speech was at 11 o'clock this morning. We were in the middle of our own discussions. I think that all I can do at this point in time is offer my congratulations for the re-election by such a margin. But of course, we will look very attentively at what the proposals are at the European level. For the moment, we are also very fixated on the April fiscal governance framework that has been decided and which is obviously vetted by the Eurogroup and which will see implementation in the early weeks of September. You asked me about our staff. And I would just like to say that, number one, a very significant majority, if not 80 to 90% of our staff, is highly motivated by the mission of working at the European Central Bank and for the benefit of European compatriots. I would also say that a lot of people are working very hard in this institution. And I think that all Europeans should appreciate that this work that translates into a few recommendations, into a few numbers, and into a few policy matters are substantiated by massive amount of work that is itself supported by what we call the shared services. And I'm extremely grateful to them for the work that they do, and I'm extremely privileged to lead this institution. I'm not saying that, because those would be my speaking points. I'm not reading from any speaking points. I really mean it. Second, because we have to be mindful of the very large amount of work that is discharged by many of them, we of course have programs in place. We have a lot of means and tools that are available for members of staff who feel under pressure, who feel that they're not getting the right opportunities. And we have beefed up those mechanisms. Just to give you an example, since I started as president of the ECB, we've put in place a whistleblowing procedure. We've installed a mediator who's been starting his work earlier this year. We have numbers of workshops for the leadership in the institution to understand the ramification of leadership and how it is important to not only motivate but also encourage members of staff who work in the various divisions of the ECB. And we will continue doing that. We will continue the dialogue with all staff and certainly with staff representatives. And we conduct our own surveys as well to corroborate or understand better what is at stake. But I take huge strength from the motivation of our staff and the determination that they all have to do a good job for the Europeans.
Thank you, Madame Lagarde. And the next question goes to Martin Arnold of the Financial Times. Martin, please.
Thank you. Madame Lagarde, two questions from me, if I may. Firstly, how much do you think the ECB will need to slow the economy and slow demand if wage growth does not moderate, as you've forecast that it will? And secondly, given that Donald Trump is now leading in the polls ahead of November's presidential election in the US, what do you think that if he wins, that could mean for both inflation but also growth in Europe? Thank you.
Thank you very much, Martin. On the second question, I'm not going to speculate on political development, particularly as election processes are underway and sometimes under dramatic circumstances. Of course, we have to take into account the consequences of, for instance, the increase in tariffs or policies that are determined outside of the euro area by any country with which we have either strong trade or financial links. And obviously, given the size of the US financial markets in particular, the developments taking place in the United States will be very carefully assessed to see what consequences it might have on the European Union and on the euro area in particular. On the magnitude of I guess you're referring to interest rates movement that would be needed if the wages were not to decline as expected. First of all, I would deal with you if. It's obviously a domain where we dig and we research and we try to find as much evidence, surveys, assessments as possible. And we do that with all national central banks, but we do that also on the basis of our corporate telephone survey, on the basis of all the numbers that are reported by Eurostat, on the basis of the wage trackers, and honestly, on the basis of everything that we see, the direction in 25 and in 26 is downward. And it's pretty, it's not basic, because none of that is basic, and a lot of developments have not had a lot of historical previous examples. But there was a period of 2 years of very high inflation because of the way in which employment relationships are organized in Europe. There was an element of catch-up. And because of the staggered determination of collective bargaining agreement, annual, biannual, triennial negotiations, the deferred impact of inflation is taking place now. The highest numbers that you have are in 24. Whether you look at wholesale, retail, public sector, private sector, it's in 24 that the impact is the heaviest. And the catch-up, once completed, will return the employment relationship and the collective bargaining agreement process to a more normal path. And if I'm to believe what our national central banks see in their respective numbers in the 20 member states, they see a return to numbers that are perfectly compatible with our target of 2% in the course of 25, and even more so in the first part of 26. So I'm not going to entertain the hypothesis where all that would be wrong, because there's too much corroboration of our assumptions and too much by way of both model-driven but also empirically determined understanding of what is going to happen. Now, we might be wrong. And if we are wrong, we will do what we normally do. We reassess on the basis of the data, and we take the decision, and we continue to be restrictive, more restrictive if it was necessary, so that we can return to our target in a timely manner. And that is the invariable in any of our reasoning. Return to target 2% in a timely manner.
Thank you, Madame Lagarde. The next question goes to Isabella Bufacchi of Il Sole 24 Ore. Isabella, please.
Good afternoon. Thank you for the opportunity. President Lagarde, I have two questions. The first question is on the decisions. And I go back to a sentence that is written, domestic price pressures are still high, services inflation is elevated, and headline inflation is likely to remain above the target well into next year. So this is not totally new, but it gives us a very good idea why you didn't cut rates today. Looking forward, without pre-committing, is anything that in here we should look at to give us some hints that a cut will come? So what has to change in a way to reassure people, citizens, that anyway we are on this trajectory of rate cuts? And if I may, my second question is if I can go back to, you already commented the Euro area bank lending survey, but if you can say a little bit more, because you said credit is weak, and is it too weak? Is normalization in financing conditions too weak, as you are in restrictive territory? And I have the feeling you will keep on staying on restrictive territory for quite a while.
Well, that's what we say very clearly in the monetary policy statement, that we will stay in restrictive territory as long as is necessary to reach our 2% target. And that is clearly the case, and we are not at target, and there's time to be had before we get to target. Your first question: what should you look at? Which means also what should we look at to confirm or reinforce our confidence that we are on that disinflationary path and that it remains broadly on track and pointing in the right direction. We must look at all components of data, all measurements, all indicators that will be coming in the next weeks and months. So this is going to be a process. I'm not suggesting that we're going to stop in September and not look and continue to look further. But it's clear that between now and September, we will be receiving a lot of information, whether it's GDP, whether it's inflation reading, whether it is wage and profit decomposition. There will be, and much more. You know, I'm overly simplistic in that enumeration. But that's what we will be looking at, to see whether or not it confirms the path that we are seeing. So I'm afraid that it's going to be a bit of a busy summer.
Thank you, Madam.
No, you asked me a second question because you asked me about the bank lending survey. So allow me to distinguish in terms of credit, because there's a slight difference between corporate on the one hand, household on the other one. So on the corporate front, rates have gone down. I think it's at 5.1, which is 7 basis points lower than where it was. But on the other hand, the credit demand has been extremely low on the part of corporates. And when you decompose their demand, it's largely for the short term, and there is redemption for longer term credits by the corporate. On the other hand, when you look at mortgages, the rate is the same, 3.8%, but there is, and that's the first time in many months, there is an increase in the mortgage demand, as indicated by the bank lending survey. So it's a bit of a story of two sides, and obviously we would like to see a bit more on the corporate side, because that would mean more investment, which is obviously a prelude to continued recovery going forward.
Thank you. And the next question goes to Marta Villar of Negocios TV. Marta, please.
Thank you very much. For President Lagarde, in the last press conference, you said that there was a strong likelihood we were in a dialing back process. Would you say this likelihood is stronger now? And for the Vice President, what is your view on the current absence of a new governor in the Bank of Spain? Do you see us getting to September with no appointment yet? Thank you very much.
Well, on your first question of the strong likelihood of dialing back, we clearly dialed back in June, and that's when we decided the 25 basis points cut. As you have noted, on the occasion of this monetary policy governing council, we decided to hold the three rates because, you know, of the reason that I've mentioned, while we are on that disinflationary track. At the same time, the domestic price pressures remain high, and the interconnection between wage, profit, and productivity can really constitute uncertainty around that path. So it's the story of on the one hand, on the other hand, which leads us to not make any decision on the occasion of this meeting. And for future meetings, it will be a matter of observing the data, analyzing the data, and determining whether or not we are reinforced in our confidence that we are on the path. Mr. Vice President, you have the rest of the question.
Good afternoon. Well, today the Banco de España was represented by the Deputy Governor of the Banco de España, Margarita Delgado, and I would even say that well represented by Margarita Delgado. She made her points, and it was part of the unanimous decision that the President referred to. With respect to the future, the election of the Governor of Banco de España is a prerogative of the Spanish government, and they have indicated very clearly that before the next meeting they will appoint someone there. Hopefully, I hope that we will have a new governor of Banco de España before our next meeting. But it's the prerogative of the government. The only thing that here, we recommend, it's something that we recommend for all the governors, is that they have to be knowledgeable in terms of economics, finance, banking, and I hope that that will be the case again.
Thank you. And the next question goes to Santi Piñol of Market News International. Santi, please.
Good afternoon.
Good afternoon.
President Lagarde. Two questions. My first question is on growth. if it's becoming more of a concern for the Governing Council, and it seems that it could enter into your process. And the second, we are in summer, and indeed it's a season of lots of reading. I wanted to ask you if in your summer reading list, would you include the 2021 strategy review to refresh the thoughts of what to do in the next round, and what are the areas that are likely to be revisited for the next one? Thank you very much.
Well, thank you so much to take care of my summer reading. I think I might do a lot of reading stories during the summer for my grandchildren rather than dive into very substantive reading as you suggested, but I'll come to that question later. So, growth is obviously something that we look at carefully, and we certainly observe that we have recovery. It's a recovery that is led by services, supported by what we call the virtuous circle between higher employment in services and consumption of services. I remind you that service production was up 0.7% above Q1 level. That was the number in April. The service PMI remains expansionary, a tad lower than where it was, but still very expansionary. And the total employment in services has also significantly contributed to the increase of employment in Q1. So services is definitely leading the way. It's clear that on the manufacturing side, it's not the case, and manufacturing has actually declined in the last few months. And the other aspect, which we are also looking at very carefully, because it helps to have a forward-looking vision, is the level of investment. And investment remains weak, driven also by the tight financing conditions and by the uncertainty experienced by the corporate. But we have recovery, and we will continue to observe carefully where it is coming from. Suffice to say at this point that it is service-driven, not manufacturing-driven, and that investment could certainly be stronger going forward. The other element which I pointed to earlier on is this issue of exports. And I think that this is also a domain that we will look very carefully at to see how the numbers are faring going forward, and in particular, what is the competitive position of the European Union and the euro area relative to other economic nations, in particular China. So to come back to your question, which is really, what are you going to do with the strategy review? So it is not a strategy review. Let's be clear on that. It's an assessment of our strategy review. The strategy review that we conducted back in 2020, 2021 was a massive exercise that we conducted after, I forgot whether it was 14 or 18 years of no strategy and no strategy review. So it required that we really, as I said at the time, we turned every stone and we looked at everything that we use, that we decide, how we decide it, how we communicate it, and we will assess what has been achieved, where we have been short, where we can improve, and that will be not the lengthy process that we had, but a shorter process. It will start reasonably soon, and you should expect outcome in the second half of 25. And we have deliberately excluded any discussion concerning the symmetric 2% medium term, so the inflation target will not be debated. It can be debated, in the future by a future president of the ECB, but not on my watch. And the other item that also we will exclude is the discussion of the dot plots, given the experience that some of my colleagues have had of this element.
Thank you. And the last question goes to Anna Karismo of the Finnish daily Yle. Anna, please.
The Finnish Broadcasting Company. Thank you. Thank you for the opportunity. The inflation is running at very different paces in different EU countries. For instance, in Finland and in Italy, the annual rate is under 1%. And actually, we would need a rate cut. So isn't it a problem, or how big a problem is it for the ECB's council that for some countries the rates are too high, and that actually we would need a rate cut for growth?
Well, thank you for your question, but that is the beauty of the euro area. It's the beauty of Europe, but particularly the euro area, because we are a monetary union and we are 20 different fiscal jurisdictions. As a result of which we have discrepancy or disparity, if you will, between some countries and others. It was the case exactly in the other direction at the time when inflation ran very high, where you had Nordic countries or Baltic countries where inflation was hitting in the 20 plus, when the average was much lower, and the peak on a euro consolidated basis was 10.6. So this is the reality that we have, and we have to deal with it. I have to tell you that each and every governor, when he or she walks in the Governing Council room, is a member of the Governing Council and not the representative of his or her country. I'm not suggesting that it's not in the back of their mind, because of course they come from there, they return there, and they are very much aware of the reality of their economy, but they also know that we are making decisions for the euro area at large, and we cannot make, specific decisions that would be nationally and member state based.
Thank you. That brings our press conference to an end. We will be back here on September 12th, and up until then, we wish you a good summer. Thank you very much.
And I hope a good break and some vacation for many of you. Yes.